Hi, I'm Max Keiser. Welcome to the Keiser Report. Lars von Trier, the Danish filmmaker, he's in the news recently, down at Cannes Film Festival, making some highly controversial remarks regarding Nazis, Germans, Jews. But check this out. Let's look at some of these other stories that are circulating and tell me whether or not this seems a bit odd to you. Stacey Herbert, tell us.
I think you're referring to my first headline here. Munich Re says prostitutes attended reward party. And that's not the shocking thing, okay? This is Munich Re, the big reinsurance company. They had a little division called Ergo, and they held a reward party to reward the insurer's high-performing agents. And there were 100 executives that attended and 20 prostitutes. But get this. Women wore color-coded armbands with red for hostesses, yellow for those available for sexual favors, and white for women reserved for executives and top agents. After each trip to beds set up near the thermal baths, a woman would receive a stamp on her forearm.
So let me get this straight. Munich Re, a financial terrorist responsible for creating ghettos, financially disadvantaged folks who are on the short end of the ghettoification of the financial terrorist schemes of General Re, are forced to wear yellow armbands and be sex slaves for their German hosts.
Yes, and then be stamped on their arms afterward to prove that they were used in this way.
Let's not forget the little serial code stamp on the wrist as part of the package.
But Max, the story here is that this goes from the very bottom. These are just agents going door to door selling insurance products in the financial services industry. The top of the pyramid of banking establishment is Dominic Strauss-Kahn.
Because this is the culture, isn't it? Dominic Strauss-Kahn is part of the banking culture. Whether it's Dominic Strauss-Kahn, Lloyd Blankfein, Jamie Dimon, this guy Pandit over at Citibank, the CEO, just paid himself $42 million for stealing $420 million. They have a culture of predatory behavior where once you, like a serial killer, once you steal money from people with mortgage fraud, or with banking fees that are illegitimate, or with collateralized debt obligations, you get a taste for the serial financial killing, you graduate to these higher crimes, and you become a Dominic Strauss-Kahn or a Lloyd Blankfein or a Jamie Dimon, where serial financial murder is part of your day-to-day life. That's the culture you live in.
Well, speaking of color-coded, Max, let's move on to the next headline, because this does have color-coded debt warnings in this story. Financial repression coming to America, El Arian. So this is Mohammed El Arian, one of the heads of PIMCO, the largest bond fund in the world. And he was commenting on the global debt problems and noted that there are some countries already signaling red, like Greece, Ireland, and Portugal. He said then, quote, others are flashing orange, like the U.S., and already require future sacrifices, most likely through a combination of higher inflation, austerity, and importantly, financial repression. El Arian classifies financial repression as seeking to impose negative real rates of returns on savers.
Right. Well, yeah, it's a good story to follow up on. Financial repression or wealth confiscation. Again, the ghetto model from the 30s and 40s, people had their wealth confiscated by the usurpation of the democratic process by the National Socialist Party, and they were put in the ghettos and they were eventually killed. I mean, here now we're seeing the same process in Europe and Greece and in Ireland, and what this gentleman is referring to is the same thing coming to the United States. And the key there is negative rates for savers. We've said all along that the global conflict is not ideological, it's not religious, it's savers versus speculators. People who should get 3 or 4 or 5% on savings because they worked hard and they saved money are subsidizing, or they're being penalized by the speculators who are at the point of a gun, got Ben Bernanke and the ECB to keep rates near zero to finance their speculation. And this is the true conflict that's engulfing the war, and the true reason why you've got people in Cairo, in Wisconsin, in Tunisia, and now in Madrid. It's savers versus speculators. It's financial repression and oppression.
Yeah, and I might add, though, of course, we're being held hostage, all the savers of the world and the workers of the world, by those very guys who are with prostitutes and yellow armbands. This is the saver versus speculator war.
Well, it develops, as I said, it's a serial killer. Once you start to just steal wantonly without any accountability, and they call it moral hazard. I mean, do you call a serial killer? His problem is, Judge, he's got moral hazard. He murdered 37 people. He suffers from moral hazard. That's a euphemism for serial financial murder.
Well, if you're looking for an end to this financial repression, Max, the next headline does not bode well. Inflation jumps again, but Osborne tells King to keep rates low. So this is George Osborne, the Chancellor of the Exchequer in the UK, and Mervyn King, the head of the Bank of England. Inflation jumped to 4.5%. and is due to hit 5% by the end of the year. But despite this, they're saying don't raise the rates.
Well, this is exactly what I'm talking about. Inflation is rising. The price of food and energy is rising. But they won't let interest rates or wages rise because they want to keep rates near zero to finance their speculation. And whenever they make a bad bet, of course, they get bailed out by the taxpayer, who then has to suffer austerity measures to pay off these debts. It is financial repression. It's using the globalized financial networks to impose what I call the casino gulag model of economics. And Mervyn King is being, again, like others in this system, he's got a gun to his head. Osborne, the Tory from the UK, is a financial serial murderer.
Remember, the Big Bang started in the UK when Margaret Thatcher unleashed this model upon us. And one of the very first assets transferred from the public domain to the private banking class was the public transport system. And I want to note one thing about the public transport system in these inflation numbers. Public transport fares rose by 5.3% on the month of April and by 22.3% on the year. So remember, we're told that we have to transfer this to the private sector because they're so much more efficient and lower prices for us on these services that we'll hand to them.
No, that was a scam. Look, government is good at running stuff like transportation, end-to-end cooperative networks. That's what they're good at. Economies of scale, they get the best price. Private sector is good for introducing stuff like Apple computers and computer gadgets and stuff like that. But you can't want the same people who are competing selling soda pop running the transportation sector, or you end up with exactly this problem. You have rampant inflation, high prices, they walk away from it. Look what happened in Fukushima. It's a private contractor, TEPCO. It blew up, and where are they? They're hiding under their beds. At least have the decency to put a sword in your heart and commit ceremonial sepulcher.
Well, speaking of killing yourself, Max, that's in the next headline. The very same guys that blew up our global financial economy with financial weapons of mass destruction that exploded, probably while they had some prostitute wearing a yellow armband. Death derivatives emerge from longevity risks. The longevity risk is that you and I and people watching might live too long. Goldman Sachs, Deutsche Bank, and JP Morgan Chase, which bundled and sold billions of dollars of mortgage loans, now want to help investors bet on people's deaths.
Well, I've often said, as I've said on the show, if Auschwitz was listed on the New York Stock Exchange today, they would have never invaded Germany or tried to put an end to World War II, because too many Americans and British people would be profiting off the business model of Auschwitz. This is the final solution for the derivatives model, is to exterminate millions of people using financial oppression. Now, what don't you understand about that?
Well,
Busta! Go hide under your bed again, you frickin' idiot.
Well, the article in Bloomberg points out that the closest thing to this is the synthetic CDOs that blew up the financial economy, because you're betting on the outcome of something that is not associated. It's not you taking out life insurance on your own life. It's Goldman Sachs, JP Morgan, and Deutsche Bank taking out an insurance on your life.
Well, again, this is all made possible by interest rates being at near 0%. You can create these huge Ponzi schemes that are self-referential, that are tied to indexes, that are created out of the anal orifice of some quant on Wall Street who is the only guy not getting laid. And then you try to market that to hedge funds and pension funds, and you make huge fees. But at the end of the day, you're not talking about anything that would qualify as economics. This is the casino gulag financial oppression in action, and it's killing you.
Well, it is tied to also the financial repression of attacking savers, because these guys have to steal the savings of people who have savings. And they are marketing this product, these derivatives, towards the pension funds sitting on more than $23 trillion of assets.
That's another form of austerity. They dump all of the unsustainable risk into pension funds, and then they say, oh, the pension funds are losing money, and by the way, you have no pension. Why? Because they stole it, vis-a-vis this backdoor theft using derivatives.
As these financial death derivatives put the final nail in the coffin of our Western economies, we're moving into a new world order. Apparently, according to this next headline, China's central bank lays it down. New IMF leadership should reflect new world order. So this is a quote from the Chinese central bank governor who wants somebody to head the IMF who's from China or Brazil or a developing nation.
Yeah.
So I want to look at one final headline here to see what this new world order might be and whether it might not look a whole lot like the old world order. Exploding watermelons put spotlight on Chinese farming practices. Fields of watermelons exploded when a farmer and other agricultural workers in eastern China mistakenly applied 4-chlorphenorone, a growth accelerator.
Everything is just overhyped, man. It's overstimulated. And it's all blowing up.
So, well, maybe they might take this growth accelerator and now apply it to their own economy. And I think they might just be ready to take on the world financial system, right where we left off.
That's what we need. More artificial growth stimulation. All right. Well, Stacey Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay there.
More than a month in one of the most extreme environments on the planet.
This is Antarctica, and people have to be aware that they are far away from civilization.
Sean Thomas discovers what makes Antarctica so special and attractive for many.
The wildlife in Antarctica is both unique and fragile.
Expedition to the bottom of the Earth on RT.
Welcome back to the Keiser Report. Time now to go to Los Angeles. Speak with Nomi Prinz. Nomi is a former senior executive at both Goldman Sachs and Bear Stearns. She is the author of It Takes a Pillage. Nomi, welcome back to the Keiser Report.
Thanks, Max.
Nomi, I want to touch on this Matt Taibbi article for Rolling Stone, The People versus Goldman Sachs. Of course, you worked at Goldman Sachs as a managing director. And I also want to bring into this little discussion some comments made by a Wall Street bucket shop that goes by the name of Stone Street Advisors. In the story by Matt Taibbi that Stone Street Advisors takes exception to, one of the things they bring up right away is Lloyd Blankfein, CEO of Goldman Sachs, of course, is being accused by Carl Levin of lying before Congress and lying to its clients. Your thoughts on Carl Levin's accusation of Lloyd Blankfein? Was he lying to his clients, and was he lying to Congress?
With respect to his clients, and those are some points that were brought up by Levin and also in Matt's article, there was an issue around certain deals. One, for example, was Hudson, where Goldman, in order to get clients to buy those deals, indicated that it would be taking a position on the side of those same clients within those same deals. So the Hudson deal, for example, was a $1.2 billion deal. Goldman was going to take a sliver of a $6 million position in that deal, and because of that, that was one of the sort of carrots, the bait, to bring clients into the deal. And as the documents show and as the article mentions, it turned out that Goldman had a $2 billion short position against the deal. So it's sort of like there was this little teeny carrot, and then there was this whole dumping of sludge on the other side, and the clients who came in were caught in between. And there was a number of deals for which that was the case in different ways. So the legal aspect of that is whether or not Goldman has to indicate everything else it's doing to the clients that it's trying to get into these deals, into which they're also sticking really bad securities, toxic assets, things that are just stuff they want to get off their books because they don't want to deal with that, which is the crux of all of these CDOs that were created around the later part of 06 and 07. They were stuff that Goldman was trying to dump away from its books so it could get first flat and then short, and it was significantly short, which brings us to what Lloyd Blankfein was saying in front of Carl Levin in the committee, that they weren't significantly short. Well, they were. So that on its face is a bold-faced lie. They were short. They were short against the deals. They were short in general against the market. But the legal question, and the thing that's going to be hard to prove, is whether or not that he lied because he was short, but what does short mean? It's that sort of Clinton-esque what is.
Well, what Blankfein comes back with is that he is making, or Goldman Sachs, they're making a market. And within that phrase, making a market, you can hide an awful lot of sins. And, of course, it's not the problem on Wall Street with the elimination of Glass-Steagall and other regulations is that you have groups like Goldman Sachs claiming that they're making a market. Of course, that's not their job, is it? But the fact that they can claim they're making a market gives them a blank check. They can say almost anything, and they get away with murder. Isn't that correct?
Well, exactly. I mean, Goldman's profits were predicated 80% on their trading revenues, and not distinguishing those trading revenues from market-making revenues in which they're taking positions. They could be buying for one client. They could be selling for another client. And what the decimation of Glass-Steagall did, that the notion of Glass-Steagall going away allowed investment banks to find a way and push away in Washington to be able to leverage, to be able to borrow, to be able to do whatever it was they wanted to do to create profits in a very risky way. And there's a lot of arguments that says Glass-Steagall had nothing to do with a company like Goldman Sachs making profits, but the fact is it spurred a company like Goldman Sachs to go and create leverage and find leverage and lobby for leverage and create all these risky products. So there was a direct result between the repeal of that act and investment banks like Goldman Sachs doing what it is they do. The problem, though, because of that, is that there was never a return to the idea of what's the difference between a market maker, and this is Lloyd Blankfein's argument, and a company, an investment house that's creating securities on behalf of its clients. So from the perspective of Goldman, from the perspective of the legal, poorly regulated investment banking system and banking system, the company is allowed to do what it calls market making, to be short, to be long, to do whatever it needs to do, and have this responsibility to its shareholders to itself be a profitable company, which they also hide behind, and to create these securities. It used to be that issuers, and this was what Glass-Steagall was created in some ways to delineate, issuers were technically on the side of their clients. If they issued debt for a company, if they brought clients along into that debt issuance, they were supposed to have some notion that that company was going to do well. But when you get into something as complex as a CDO, where you're throwing in all of this where you're throwing in the deals that you have on your books that you don't want, where you're trying to stuff them away as quickly as you can, that notion of what's good and what's bad and what's responsible and what's ethical is completely murkified.
Now, there's another problem with this making a market argument that they take. Aside from the gross miscarriage of everything that would pertain to being competitive. Of course, this is completely anti-competitive, and that's why so many of these competitors are being destroyed, because they're being gobbled up by a few main behemoths like Goldman. But there's another problem. If they're making the market, it seems to me that when it suits them, they can go in front of Congress and they can effectively threaten to close the market if they don't get their way. They have this kind of power now to put a gun, figuratively, to Congress's head, as we saw in 2008 with Paulson and other Wall Street types. If you don't give us what we want, because we are quote-unquote market makers, we are the market, we can just close the market, and they threatened financial Armageddon. Is that too much of a spin on it, or is that correct?
No, and you have to take it from the bottom up, and because it's not just a spin, it's really the whole mechanism from creating those securities to creating the market. Part of Matt's article and part of what happened out of the investigation was that there was a deal, for example, Timberwolf, which was one of the CDO deals, where an Australian company bought an investment within it and then wanted to get out, and it couldn't get out. Goldman wouldn't make the market to basically take back the crap they had just sold, and instead try to extract from this company more money, more margin, because there were going to be more losses in the deal they had just sold. So on the one hand, they can stop a market almost immediately after creating it, and on the other hand, you take that up to a larger conclusion, and they can basically be in and out of markets at will on a larger scale. And it goes back to the fact that we don't have a banking system, that we don't have the appropriate regulations to dissect companies that are merely there to take sides. And yes, they can hedge some sides, but hedging is not taking a $13 billion position, which is what Goldman ultimately took. It was 54% of their overall risk at one time, which is indicated in some of those documents that were in the report. That's not a little position. That's not a market-making position. That's a betting position. There's nothing legally and regulatorily to keep them from betting. There is nothing beyond ethics to keep them from betting against certain clients when they want to bet with other clients, depending on where they feel they're going to make the most money. So yes, it all goes into the definition of what's a market maker versus what's classic investment bank that is creating a situation whereby customers can access funds and investors can come and supply those funds. And those are two very different things. Yet in our loosely regulated banking environment, they fall into one place. Like a Goldman, the bigger, more powerful companies, as you mentioned, take more and more of this role, and that destabilizes the entire financial system. And yet, after everything we saw, after all the bailouts, after all of the pain that is still going on, there is no change being discussed in that regulatory structure to keep this stuff from occurring or becoming an even bigger problem in the future, which therefore it will.
All right, Nomi Prinz, former managing director of Goldman Sachs. You are familiar with the culture of Wall Street. Your professional career starting out was tied to the highest echelons of Wall Street. Now, what do you make of this statement coming out of the Stone Street Advisor Group? They say basically they're attacking this Matt Taibbi piece. And one of the things mentioned here is that, well, maybe Goldman lied to Congress, but, quote, everyone lies to Congress. So he's legitimizing institutional kind of disregard for the law. And this goes in print, and there's no outcry about this. And given what we saw with the Dominic Strauss-Kahn and the IMF's behavior recently, and this is part and parcel of a culture of Wall Street of lawlessness, of transgression of any rules or regulations, and it seems as though you've got a culture that's gone just from law breaking to being predatory, almost Caligula-like. Caligula capitalists. They're going absolutely bonkers down there. What is that? You lived in the culture. What is it that's going on with these people?
Whoever's able to sort of, discard sort of central morality in a lot of ethics and just, basic human kindness tends to rise in these firms and to run them. And if you take that outside of the Wall Street arena into, what the IMF is doing with peripheral weaker countries in Europe versus the core countries that the IMF represents, even though it's supposedly, a body that represents 187 nations, it doesn't. It basically represents the stronger nations. The Wall Street firms represent their stronger selves, the people that rise in these companies are the people that want the power and the influence to maintain what they have and to grow what they have. And unfortunately, this kind of power begets more power. You know, the more influence that's concentrated within a few banks that operate globally, the more influence that's concentrated at, you know, some of the members of the IMF, some of the member countries that hurts some of the others, the more power that's concentrated at the Fed that bails out a banking system and then moans about the fact that the United States has to raise its debt cap, which is only representative of debt that was created to float the banking system, and take that away from public programs, which is the IMF's MO as well. You know, that creates a situation where the weaker countries, the weaker people, the individual mortgage holders, you know, however it is you look at it, whatever level throughout the globe, continue to get hurt at the hands of people who really just want power and influence, which continues to manifest itself into more power and more influence.
All right, Nomi Prinz, we have about 1 minute left. I'm reading something you wrote just this week, talking about the IMF and the austerity measures and what's going on in Europe and the basic deal that they offer. They're swapping debt for austerity. We've got about really less than a minute left. Just walk us through the modus operandi.
Well, it's against what the IMF does. It looks at double-digit unemployment and tremendously weak, indebted nations that became indebted because their banks either owe money to the core banks or because they opened their doors, as they were said to have to do by the EU, by the IMF, to international capital. International capital left, leaving them with just a junky economy and impoverished and unemployed people. And the solution that the IMF is putting upon this is to say, all right, we'll do more of that. You know, continue to impoverish, continue to reduce your social programs, continue to create austerity measures so that we can loan you money so that you can float whatever international capital and whatever mistakes that the banking system within your country, private banks or external banks have made. And we will continue in that manner to make your economy worse while we try to float these investors as long as we can.
All right. Nomi Prinz, thanks so much once again for being on the Keiser Report.
Thank you.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Nomi Prinz, author of It Takes a Pillage. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.